Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this special edition, I'm going to be focusing on the entire IPO space that's been buzzing of late. And of course, in this week again, we are going to be looking at new IPOs hitting the street. The one that's on my radar in this video is GPT Healthcare. Remember, the company operates and manages mid-sized multi-speciality hospitals under the ILS Hospitals brand, and it's now fixed the price for its 502 crore rupees IPO from 177 to 186 rupees per share. This IPO will open on February 22nd and will be open until February of 26. Now, there is a combination of both fresh issue as well as an offer for sale. About 40 crore rupees are being raised via the fresh issue, and an offer for sale of 2.6 crore equity shares is going to be seen from the private equity firm Banyan Tree Growth Capital too. Banyan Tree holds about 2.6 crore shares or 32.64% stake in this Kolkata-based GPT Healthcare is divesting its entire shareholding in the company. Let's now welcome our guests on the show. Mr. Anurag Tantia joins in, as well as he's the and CG Group's CFO Atul Tantia also joining in, the top management of the company. Welcome to both of you, and thank you so much for taking the time out for this discussion. Mr. Anurag Tantia, to you first. Help us really understand, the objectives of this IPO first. And of course, if you could also elaborate on the fact that the private equity firm, after its complete exit, Banyan Tree Growth's complete exit, how will the shareholding pattern change after the listing as well?
Sure. Thank you for having us. This is mostly an offer for sale from Banyan Tree Growth Capital, which is going to completely exit the business. They came in as private equity investors in November of 2014. And through the listing in the public market, we'll provide a complete exit to them. The promoters will continue to remain invested in the business and will have almost 65% stake in the business going forward as well.
Okay, fair enough. What about the proceeds from the fresh issue? Mr. Atul Tantia, maybe you can come in on that. Tell us, what will the fresh proceeds be used for?
Sure. So the fresh proceeds of 40 crores will be primarily used to pay the debt. We have about 46 crores as gross debt on the balance sheet, which will be paid down by 30 crores from the fresh issue, and the balance will be used for general corporate purpose.
Okay, and of course, give us a little bit sense about your business. You're largely present in east of India. There are at least 4 full-service multi-speciality hospitals that you have currently, 561 beds as of total, as per the information that's available to us. Tell us what is the plan of action going to be on the expansion front? Would you be looking at launching more hospitals going forward from here? And if at all, what is the pipeline going to be looking like? Or maybe you may be looking at adding capacity of beds in the current hospitals?
Sure. So we operate a regional chain of hospitals called ILS Hospitals. We currently own and operate 4 hospitals in the Eastern India geography. These are mid-sized hospitals located in very densely populated areas. So 2 are in Calcutta, 1 in Agartala, and 1 in Howrah. Going forward, we are commissioning 2 new hospitals. We have signed lease agreements for a hospital in Raipur, which will get commissioned by early 2025. And we are also coming up with a greenfield hospital in Ranchi, which will get commissioned by FY27.
Okay, so FY27 we'll see the Ranchi hospital, and the others, where are they coming in?
The first hospital coming up is in Raipur, which will be commissioned in calendar year 2025.
Okay, so the Raipur one is the first one that we will look at in FY25. Okay, what is the kind of business that this will add to your top line? These 2 hospitals by FY25, what is the kind of addition? And by FY27, when you're looking at the Ranchi hospital, what is the kind of revenue addition that you're looking at, and what is it currently?
So in terms of addition to revenues, our current hospitals are doing an ARPOB of almost 34,000. These hospitals that we are setting up in Raipur and Ranchi will have a bed capacity of almost 152 beds and 140 beds respectively.
Okay.
So at a mature level, we expect them to do revenues of close to 100 crores each. When I say mature level, that means an occupancy of 65% plus, which will be 3 years to 4 years post commissioning of the hospital.
Okay, fair enough. Could you tell us, what is the occupancy rate that you're looking at currently, and what is the trend likely to be?
Sure. So it's spread across the network. So our mature assets that are the Salt Lake and the Dundam Hospital are at 70% plus occupancy. The Salt Lake Hospital is at 74% occupancy. The Dundam Hospital is at 82% occupancy. The Agartala Hospital is close to 60%, and the Havra Hospital is close to 45%.
Okay.
At the network level, we are at 59% occupancy. We expect this occupancy to ramp up at the network level with the increase in the occupancy for the Havra Hospital as well as the Agartala Hospital. We are adding some specialties as well in the Agartala Hospital in terms of a radiation oncology setup, which is to be commissioned in the next 3 to 4 months.
Okay, and the ones that you're now going to be setting up, the Raipur one and then the Ranchi one, is that also going to be a multi-speciality? And would your new additional specialities which you're adding into the Agartala facility, will they be also present in the others?
In terms of the Raipur and the Ranchi, they will be full service hospitals. They will be multi-specialty hospitals with two or three super specialties, which are not prevalent in the market. In terms of radiation oncology, it is planned in the Ranchi hospital, but the other hospitals in Calcutta or Havra do not have the space to set up a radiation oncology setup. So it will be primarily in Ranchi as well as Agartala.
Okay, fair enough. Tell us, sir, on your margins, Mr. Atul Tantia, what is the kind of margins that you are looking at currently, EBITDA margins, and where do you see the band going forward?
So the current EBITDA margin is at almost 22%. We expect an improvement in the EBITDA margin with the improvement in the occupancy. Once the occupancy goes up to close to 70 odd percent, we expect the EBITDA margin to be closer to improve by almost 150 basis points. So we should be in the 23.5 to 24% mark. For the mature assets, our mature hospitals like Dum and Salt Lake are already showing that kind of EBITDA margin, and we expect the Havra Hospital to also follow that path.
Okay, so Mr. Anurag Tantia, to you, right now East India is the focus. You're slowly and gradually going to be expanding to mid and north region as well. Going forward in the long term, what is the plan? Are you looking at the entire north and east region first, or are you looking at pan India? What is your entire sense right now, sir?
We are largely focused on the eastern part of the market. Eastern part of the market, if you understand, is underpenetrated from a healthcare perspective, especially called corporate healthcare. We just have 15 beds per 10,000 population in the eastern part of the country, compared to the north or the west having almost 40 beds per 10,000. Our expansion also is in Ranchi and Raipur, which is in the eastern part of the country, and we are focused on spreading our brand name in this geography only. We are evaluating cities like Guwahati, Jamshedpur, Patna for acquisition opportunities as well.
Okay, and for these two hospitals, I wanted to understand from you, are you going to be raising any funds? How would you be really funding this expansion?
So given the neighborhood setup of our hospitals, our payer mix is quite healthy. So we have 95% as cash and insurance patients, which leads to a negative working capital cycle for us. Our cash to EBITDA conversion is north of 80%. This means that we have strong internal accruals as well to fund these to growth opportunities. We will take some debt in terms of long-term equipment finance to fund the equipment finance that we do take. Balance will be funded by the internal accruals.
Okay. Mr. Anurag Tantia, how do you really look at this space that you're entering at a time where the market is already crowded with established players? You're looking at your expansion plans with already, a tough competition in place. How would you be really ensuring that, you continue to sustain the market share that you may be having currently? If you could detail that also for us. And of course, look at grabbing some more.
Sure. So, as highlighted earlier, we work in a region which is under-penetrated from healthcare point of view. We are looking at expanding our presence in this region itself, bringing good quality healthcare to cities like Raipur, Ranchi, Patna, where the presence of national chains and even regional chains is less. So, I don't think we'll be entering a crowded market. We'll be entering a market where there is significant gap between demand and supply. Plus, with the increase in the insurance penetration, accessibility of healthcare has increased overall. People realize the value of good quality healthcare, especially coming from corporates. And this is something which the COVID has really impacted in terms of making people aware of the importance of healthcare. So Eastern India, I would say, is not a crowded market. It's a market where there is significant potential, and we are primed to make advantage of that potential.
Okay, Mr. Atul Tantia, to you, just wanted to understand a little bit as far as your segmental revenue is divided. If you could help us understand which are your key segments, where do you drive maximum revenues from going forward? What are the key levers of growth that you will be betting big on?
So in terms of segmental revenues, honestly, we just operate in one segment, which is the hospital business. We don't have any segmental revenues. We do have specialties, which are in terms of the various specialties that we do offer. Our top 10 specialties contribute almost 85% of our business. So we are quite well diversified. Not a single specialty doesn't contribute any significant amount of business. It is it's a conscious call of the management to have a well diversified portfolio in terms of the number of specialties that we do offer.
Okay, fair enough. Well, on that note, thanks a lot for being with us onto this special edition and sharing some of the insights from your, upcoming IPO. All the very best to you for that. And we shall definitely get in touch with you again once the listing takes place to really understand more insights about your business going forward from here. All the very best from the entire team of Business Today.
Thank you.
All right, with that, we wrap up this very special edition. GPT Healthcare, that's going to be hitting with its IPO on February 22nd. And of course, there are expansion plans that the company has been planning for hospitals currently. Two more to come, one in FY25, one by FY27. And of course, there are going to be additional specialties that the company is going to be adding on to as well. We will continue to focus on this entire space and give you all the details as and when required. Many thanks for being with us onto this special edition.